welcome. If you're not, welcome back. My name is Nay and I make videos on education, personal finance and development for international students, so basically like F1 visa holders and H1B visa holders in the US. So today I'll be talking about the difference between index funds and ETF, because earlier I made a video on how to grow generational wealth in about a decade, which is by consistently and continuously investing. But I know that some people might want to invest in ETF instead of index funds, so I'm gonna kind of like explain the two in this video. Also, if you see me staring down, I am looking at my computer and I'm making sure that I give you guys all the details that I wrote down. What are index funds? Index funds are passively managed mutual funds that track a particular index. That's just their basic definition. And there are different types of indexes or indices, and the most popular one is the S&P 500. And what the S&P 500 index funds has the top 500 companies in the US. And this means that when you buy an S&P 500 index fund, you're not just buying one stock, like when you buy a Tesla stock or an Amazon or an Apple stock. No, you're actually buying 500 stocks. It's like a basket with, like, you know, all of these fruits or all of these stocks basically. So if you're buying, you're not just buying one fruit in the basket, you're buying the whole basket, which has the 500 fruits or 500 stocks. So the good thing about this is that you don't have to divide your money yourself into different stocks, which is going to require a lot of time and energy that I know that a lot of people do not have. All you have to do is buy the S&P 500 from your brokerage account, and the algorithm is going to divide that amount that you put in for you. So if you put in $500 to buy like one S&P 500, the algorithm is going to divide it into those like 500 different stocks and put in the required amount of money into each stock. So the biggest advantage of this, which I personally really love, is that you're going to have a very diversified portfolio. So if one of the stocks in S&P 500, if one of the companies are not doing well and their stock tanks, you don't really feel it that much, because the stocks from other companies they are doing okay, and you know, they're gonna make up for the ones that are tanking. One other good thing about index funds is that they have low fees. I believe the expense ratio for FSAIX, which is Fidelity S&P 500 index funds, I believe it's 0.02, as opposed to an actively managed mutual fund, which would have a fee of at least 1%. So like I mentioned before, investing in index fund, it saves you time, because you don't have to go and start researching about all of the company. Like, you don't have to their stocks and the stocks you're buying, and like, you know, looking at them one by one and knowing if you're gonna buy it or if you're not gonna buy it. That's also another big advantage of index funds. ETFs, what are ETFs? They are exchange traded funds, and they're similar to index funds. They also track and underlying index. Basically they also track like the S&P 500, the Nasdaq index, and like any other index or indices. The main difference between an ETF and index fund is that ETFs are traded like normal stocks, so you can buy and sell it throughout the day at any point in time. Index funds, on the other hand, are traded only at the close of each trading day. So index funds, they are bought at the end of the trading day, and the price might vary from like when you actually like wanted to buy it. The price when it's bought might vary from when you wanted to buy the index fund. So the price could be like $500 at noon, and then like could be $450 at the end of the trading day when it executes. Basically, that's the main difference between index funds and ETFs. Index funds are like traded at the end of the market day. ETFs, on the other hand, are traded like at any point in time, like normal stocks. The both of them are good depending on what you want. Personally, I do index funds because I just want to put my money in there and forget it, which is what I do. I don't want to like trade it the way I trade like single stocks. No. Also, I don't know if I mentioned this in the beginning, but for international students and like immigrants, you are qualified to actually invest in index funds. So as far as you have a social security number, you are good to invest in index funds. I would say personally start investing in index fund, because that is one way to build wealth. That's one passive way to build wealth without kind of like stressing yourself. just allow compounding interest to work for you. Allow your money in there to work for you and to compound and compound. And that's just it. So this brings me to the end of my video. I hope it helps. I helped you guys. Don't forget to like, subscribe, and share my video. You can follow my Instagram if you want, and I'll see you guys in another video.